All right, now Ashish Chauhan joins us, and it's no magic trick there. Yes, Ashish Chauhan has finally managed to, he's been kind enough to join us for an interview to talk about BSE and what the plans for Star MF platform are. So, Ashish, we are talking about magic tricks with Samir Arora. Are you really there?
I mean, in a way, Samir is into a different zone. You know, he's in a different world. I have to run the organization and also act as a regulator. So, in some ways, our prime job is regulations. And within whatever is allowed to us, we try to innovate and put high tech there, which is easy to use. So, in some ways, Star MF is something which you guys have seen, which has become very large now. But there are many such things in our portfolio, which are equally high tech, which are equally market beating with very large market share. But currently nobody's watching because they are not giving us that much revenue. So as and when any market kind of takes some time to build and then takes some time to give you revenues, it's like any manufacturing plant, right? You invest in the plant and machinery. In our businesses, we are long gestation businesses. Many times we fail also in products. But the ones which take off, they take off like mad. So what you have seen in mutual funds, almost 1.15 crore transactions a month in last month, is telling you that when we started in 2009 and 2010 early, we were not getting even 1,000 trades a month. And now we are getting 1.15 crore a month. So you can see the trajectory. But first few years were not worth talking about. And so when it takes off like mad. And so that's how what I call non-linearity in our business is very high. And you need to have that patience and ability to work hard and evolve and pivot and things like that to kind of go into newer zone. And in some ways, it's a platform play, right? Exchanges are a platform play. And we are the technology providers to the exchange industry today. We are the only exchange in India which owns, maintains, operates most of its technology. And that kind of differentiates us from other exchanges. You have seen that in COVID times, even in normal business, like in equities, equity derivatives, where we are gaining market share. In commodities, we have become the second largest now in India. And in gold, we are getting 70% in the e-mini gold options markets. And so you can see why we are able to do this is because we have a great technology team. And of course, we have a sort of control over what we do, which is not true with many other exchanges in India.
Fair point. So we'll talk about all the aspects of your new businesses which you've incubated, where BSE is headed, why this exchange is now on course to become a fintech, a word which investors they normally relate to, and is there any plan to monetize it? But first I want to understand the general business environment, given that the retail activity is high, demat accounts are opening up, wherever there is a phone there's an option to trade now. What has been your biggest, I would say, observation or trend spotting in the pandemic era?
I think what I call the obvious one, which everyone has seen also, not only me, is the number of investors that are coming into this business who are wanting to trade or invest. In last 14 months, I think we would have added more than 2 crore investors, almost 15, 16 lakhs a month, which is like unheard of. And when you grow, you actually have larger base. So around 2019 and 2020 early, we had like 5 crore investors, many accounts registered with us, not investors, because many brokers have opened or many investors have opened accounts with multiple brokers. And so we had like 5 crore, 4.8 or some such accounts at March and 2020. And suddenly we are now close to 7 crore. I think this week probably or next week, we'll reach 7 crore investors accounts. And that's a very large number. And that is what is very interesting, that literally 2 crore new accounts have opened. And many of this new age stockbrokers like Zerodha or Upstocks or Grow, many of them have kind of played a very important part. But even the old ones like Angel or Anand Rathi or ICICI Securities and HDFC Securities, they have seen some real growth in terms of number of investors, also in terms of the business. And that's where I think India is becoming much deeper in terms of its total number of investors. But if you look at the spread of investors coming. We have now literally from every zip code, we are getting investors. Every district we are getting investors from Manipur, from Meghalaya, from Mizoram. And that is very heartening, from Jammu, from Srinagar, from Ladakh. And that is for me very heartening that India is really becoming one country in terms of investments. Of course, the FD rates have come down drastically, while as the markets have remained kind of good. I mean, they have been giving good returns. So people are also going from FD into the markets. And we are pretty much now the largest MII with the largest number of investor accounts, because we also do mutual funds. So some portion of our investor growth is not due to the trading investors, but due to the mutual fund investors who do not even have depository accounts. They actually, their accounts are kept by the registrars for the mutual funds, and that's how they are serviced. But effectively, India is becoming much deeper, wider. I mean, in fact, last budget itself, one of the TV anchors, after the budget was good, announced that now few lakh investors will be happy that budget is good. And I said, no, we have now 6.3 crore investors. That time we had 6.3 crore investors. I said, we have 6.3 crore investors. They are no longer in lakhs. And so, I mean, investor as a community is becoming very, very large. They are becoming aware of the government policies of every company. They are discussing with you guys. They are watching you guys very intently and watching the move of every company very, very well. And that's how I see that somewhere in the line, India is becoming more educated and more inclusive in as far as the markets are concerned.
In the Star MF platform you've created, let's understand it. It's big in numbers, but is it big on profits also? Because the cost of the money which you make in terms of commission and transaction cost, that is coming under pressure because what is happening in the entire startup or the fintech space.
No, it's interesting. If I had headquartered Star MF as a separate company in Bangalore, it would be worth probably a few tens of billions of dollars, because that's where you value things differently. When you come to Mumbai, you value things differently. But we are in Mumbai, and so we try to be profitable. We don't burn money at all, and that's why we don't even market much. We don't spend money on marketing. But basically, Star MF has been profitable for now a few years since we started charging. Our marginal cost of running this business is close to zero. But even if you allocate the cost to what it takes to use those resources part-time, these are highly profitable business. And in a way, the model is very simple. Every transaction, we get some money for transaction as well as for the funds movement or securities movement from the mutual funds as of now. And we have 70,000 direct mutual fund agents on our platform. And if you take larger distributors and larger brokers who have literally 30, 40, 50,000 agents behind them, we are now currently 200,000 plus agents who are distributing mutual funds in India. And that basically, I think one of the articles on the can.com had described BSE Star MF as the UPI of the mutual fund industry. And it is a profitable business, no doubt about it. We would be transferring almost 300,000 crore or 300 to 400,000 crore rupees this year, either into the mutual funds or out of mutual funds. Last year alone, we took net almost 25 to 30,000 crore rupees into the mutual funds, while as the entire industry lost 30, 40,000 crore. So effectively, we were the net positive for the industry. And this year also, month on month, we are adding a lot of new amounts into the funds. We would be reaching 1 crore SIPs every month, sometime in this month or next month. So literally, it's bursting at seams, I would say, and it is profitable. And BSE tries to be very, very conservative. Over last 10 years, whatever we have spent in terms of developing newer businesses, we have actually expensed them into that year. So we don't do a lot of, if you see our balance sheets, our P&L, you don't see that type of capital expenditure or large depreciation. But in terms of like even in the conference call with investors, somebody asked me that if you have the same capacity or better capacity, better technology than your rival exchange, and you seem to be working much better because you don't stop, you don't close down in between. Why is it that your spend on technology is less than 20% of your competitions? And I said, basically, we are smart in technology. Technology is one game where you can pay $1 billion and you can get nothing. And you can pay $100,000 and you can get $1 billion worth, right? And so that's where basically our skills come in. We, as you rightly stated in the beginning, that we are a fintech company in the guise of a stock exchange. Now, literally, we are getting into newer businesses like IPO distribution, we are almost 70%. SMEs, we are almost 70%. Bond distribution, commercial paper distribution, we are again 60-70%. We have now started a insurance distribution with EBIX of US. And so that is basically another thing that is going to happen. We are also launching a new power exchange with PTC and ICICI Bank, for which we have now got license. And so we are like going into many, many areas. In fact, day before yesterday, there was a mock trading started in Mauritius by an exchange where we have provided technology called Afrinex. And so we are basically going into using our technology, our platform of transaction processing of any type. We also have a new e-agricultural markets for spot trading, and we have started trading in spot, for example, in almonds. We have done almost 150 tons of transactions in almonds on spot, where you actually get to see the almond, you eat the almonds and stuff like that. And those are the kind of things we pride ourselves in. And so many of these businesses will start giving more returns as we move forward, and some of them will scale up. Of course, our GIFT City exchange is now having 97-98% market share in GIFT City alone. And so you can see basically over a long period, if you nurture this sort of newer businesses, some of them start giving you returns, if not today, probably tomorrow.
Fair point. Okay, so let's talk about, okay, so fair point, sir. We've spoken about where you are headed in terms of adding no revenue lines. Some businesses you have given birth to and some businesses have become reasonably mature. Now, we know that how the fintech world is commanding P multiples which are very different. They are traded on transactions, they are not traded on cash flow or perhaps even on EPS. What is stopping you from putting the Star MF business into a separate entity and then either demerging it or getting a P investor? I mean, this is a time when so many unicorns are getting created. What is stopping you from getting an investor there or demerging that business separately?
I think our board has given the approval to identify strategic investors and also basically figure out a structure which will be appropriate for that investor as well as the business growth. And so ICICI Securities has been given that mandate, and they are searching for it. At the same time, the value creation also should benefit BSE shareholders. And that's where basically if we get a good sort of strategic partner with good intent and sort of enthusiasm to take this business to create larger value for our shareholders, we would certainly be open to doing that. Until the time our growth continues, so we don't have, and it's a profitable growth. So we don't worry, unlike many of the what I call the fintech players who have to keep on searching for newer and newer revenue sources or newer and newer investors. Each time they raise one sort of round, they have to immediately go for the next round because their burn is very high. Ours is the other way around, that ours is a net sort of cash positive, profitable business. And so even if we invest more in that business, we don't have to go out and, of course, raise funds. BSE, of course, is also having good balance sheet, so it doesn't have to raise funds. But every business of BSE has a particular target of how to spend, what to spend, and what kind of revenues they that are expected in long term. Because short term we can't predict. Ours is an optionality kind of a situation. But once you start making revenues, then we start being very, very tight on cost as well as revenue target.
That's so. I understand that, Mr. Chauhan, but My follow-up question is that these are good market conditions. P multiples of what is happening to the fintech or the valuations for some of the fintech firms is an all-time high. I hope that you are not waiting for a better valuation and then end up not capitalizing on the on the market opportunity which market has to offer. I mean, if firms which are 1/10 of your size can get attractive P multiples, what is stopping you? And are you committed to take Star MF to a strategic investor in this year? And what is your hurdle rate for the valuation? I'm asking a lot of bunch of questions because everybody is curious to understand that when will you unlock this exciting business?
Basically, in a way, this is a board managed company. And so the board decides based on the context and situation. So effectively, they've given us the mandate to discuss, negotiate, and work with the strategic partners if anyone comes about. And so currently there is no hurdle rate. Whatever proposals come, we will take to the board and board can decide. And even the structures, whether the new investor brings in 25% or 50% or 70%, those are all, and whether they want demerged company or they want a separate entity. And so those are the stuff which are in the realm of structuring, and as and when what is convenient to the new investor, that would happen. But for me, it's very difficult to pinpoint a time frame, especially when you are a regulator yourself, and also a company where almost 80% of your board members are what I call public nominees. It's very important to do everything which is kosher. And of course, maximize value of our investors. And for me, the wealth that is getting created by Star MF for BSE is not temporary. It is going to be there every month. It is growing. It's going to grow pretty much for next 5-10 years at a very, very fast pace. So I have no doubt that this is something. It's not that we will miss out this rally because rallies will come and go. But the wealth that is getting created is here to stay. And whatever board decides in terms of when to and who to work with is what we will have to abide by and ensure that we execute that decision.
Mr. Chauhan, I also wanted to talk about a sector which we've spoken about, where disruption has not really happened. I mean, the Zerodhas of the world have disrupted the brokerage industry. A platform like yours has disrupted the mutual fund industry. Are you thinking on lines of doing something in insurance? Because that's like the honeypot where no disruption is happening and the scope to really disrupt is very high because margins are strong.
We launched an insurance distribution company called BSE EBIX Insurance Distribution last year during COVID times. And we have close to now 7,000 registered what they call point of sale people who are distributing on our platform. We have 15 insurance companies connected to us. We give real-time quotes whenever any general life, health, car, auto, any insurance is to be taken. Our software is able to fetch real-time quote for every single question asked and compare them and give it to the point of sale person who is able to show it to the client and then execute the policy, pay the money there and then, and get the insurance policy also in their hand at the real-time basis. There is no execution of that technology in the country today except at BSE EBIX Insurance. And so we've just started. It's early days. We have a lot of hopes on that. As you rightly said, it's a nascent market. I don't say that we don't have competition. We have many competitors which are in different stages, including some unicorns with a lot of money. But we are very confident of our technology, our execution. And so it's going to basically again go on the same BSE principles that we preserve capital, we don't burn, but our technology and our distribution ensures that over long period, we are able to create that value for insurance companies, for the distributors, and for the BSE VIX distributor framework. So it's a very exciting time, and we are able to, someday I will demo to you personally how this thing works. It's so exciting to, like, you buy stock on BSE today on your mobile. You are able to buy insurance policy on real time from literally you can compare on 15, 20 insurance companies and then buy and pay as well as get your insurance policy within literally few seconds in your hand. And that's a very, very exciting situation that has developed in BSE sort of environment.
You know, I was last question, Mr. Chauhan. If I look at SBI today has potential to make more money from its subsidiaries rather than its banking operations, because that is the kind of business they've managed to create. HDFC Group also a similar kind of a situation. For BSE, which is one is your traditional business, the pure exchange business, and then you got the new platform business, and now you also become a technology company. We are in FY22. How will be your revenue split like, and how will be your profit split like this year? And when do you think your incubated and new businesses will be more than 50% of your?
So in a way, 10 years back, if you looked at our P&L, 65-70% of our revenues came from the investment income. Today, after 10 years, that is in 2021 March, 20% of our income is from the investment, because we have also given out a lot of money back to the shareholders. And of course, the interest rates have come down. But 80% of our revenues now come from our sort of different transactions and our subsidiaries and all. And so going forward, which business is going to grow, you don't know. And some of them are part of the BSE, like as divisions, like mutual funds. But there are many subsidiaries, many joint ventures we have on agri markets, on insurance, and so on and so forth. And that's where basically it's difficult to predict. But our operational mix, even for the next 2-3 years, the revenues from transaction charges and listing is going to still be reasonably larger. I think by 2024, our numbers, if they remain sort of the same trajectory, probably the transaction charges from stocks will start getting eclipsed by the transaction charges coming out of the mutual fund business. And of course, if the INX starts becoming large, then and in revenues also, today it's not charging. But if it starts charging more, then again, we will have a different world. Similarly, I don't know how the power exchange will be received, but that's also another very exciting market. So effectively, many things that are going on in a very controlled way. And we hope that somewhere on the line, many of our businesses which we have incubated for literally 10 years plus will give us great results going forward.
Well, it's been to have you back, and thank you for joining us on this episode of India Reboot. Stay safe, and my sincere compliments on the great work what some of the exchanges have done. I mean, in the entire pandemic, the kind of systems and the processes which exchanges have put forward, it never appeared that the entire country has gone through this kind of a crisis, thanks to your ability, capability, and also willingness.
Thank you, Nikunjan. You have been supporter of our Star MF platform from day one. You are more confident than us in those days, and I'm thankful to you for that.
Thank you very much.